Everyone wants to time the end of the cycle to perfection, but in reality, no one does. What typically happens is people wait on their narrative to come to fruition, like we saw in 2021. The old narrative being $100,000 Bitcoin in December, because what we had seen in the prior cycle was the all-time high in December. And in that cycle, which was my first cycle, the narrative was a $50,000 Bitcoin and the old super cycle theory coming to fruition. That's where the super cycle started from. And of course, that theory continues to carry on through to the current day action. Of course, none of those theories eventuated. The price got to those extreme tops. Everyone kept holding the bags, myself included, and we all learned from those lessons. And now I think we've still got further to go in this cycle because we haven't necessarily seen that crazy time like we saw in 2021 and also in 2017. And if you were around in 2013, please comment down below what the narratives were for those days. We all know why the bust happened, which was Mt. Gox, but the narratives that kept people holding the bags. Price went up, people expected further and further upside. Now in today's video, which you should have already hit the like button and subscribe to the channel if you're new here, we're looking at some of the time frames leading to the end of the cycle. As I suggested, I don't think these narratives have necessarily played out yet, but if we get into these time frames and time targets and we start to see those same sort of peak top signals, extreme greed and narratives continue to play out, then we got to be on our best behavior and the warning alerts will be triggering around then. As we look at day after day, we're not trying to pick the end of the cycle. We're trying to make money from the market. Money in your bank accounts don't care where it comes from. The numbers are going to be the same if you're in profit. So forget about being right and wrong in the market and let's just follow the action day by day and follow what the charts are telling us. The trend is up, let's keep following the trend. So with that said, let's take a look at Bitcoin short term before I get to the longer term stuff with the end of cycle signals and just looking at some time counts into the end with some significant news that's come out in the last 24 hours. So in the short term, Bitcoin's broken through $112,000. We know it's been struggling here now for over 2 weeks. That's been one of the key levels, at least in my opinion, for Bitcoin to get back above because it was a swing bottom low. And typically when we see those sort of patterns happen, it generally means that the trend, the trend that's going in reverse to where that swing bottom is likely coming to an end. Even if we do test lower, these sort of moves are just grinding through until the macro trend resumes. And we've used these signals before on USDT, the USDT dominance. So where the low came in, the market broke down. As it closed back above the low, it told us that the trend was changing in the short term. And that's precisely what happened recently. And of course, we've checked back and followed this throughout the market cycle. So with Bitcoin rising above 112, we've entered the first safe zone, even though we're underneath the 50% level at 116,000. So if we get some rallies up to this level, rejections and a close back below 112, then we look for tests of around the $107,000 to $109,000. And then of course, anything further down from that. But for now, the short term is moving up to retest 116, which is the 50%, and the 7-year resistance level at about now $117,500. So this continues to climb day after day. That goes back all the way through to 2017 and the 2021 top, which brings us into the present day. So essentially, short-term analysis continues to play out. We're watching for rallies here and any sort of rejections at these resistance levels. It has been quite a choppy market to get there. And we're not seeing any sort of very clear trends, even though the trend at the moment in the short term is up. So watching out for those levels in the short term. So in terms of the time frames, I'm watching the monthly charts heading towards October and November. That shouldn't come as a surprise if you've been following the channel and beating the bots here in the comment section, of course. Now, the 6 months from the April low takes us to October. So there's a few time frames coming to a T there. Let's just keep following the trend up. So I'm still bullish on that upside. The 7 months comes out roughly November. November was the top in the last cycle. And of course, prior to that, we had December. Prior to that, we had 30th of November. So basically as close as you can get to being both of the months at once. We'd have to look at the top and what time that actually came in, but essentially 30th of November. And then another significant high here was mid-month. So you go back to that June period. We've had another June high here as well. So really we're looking towards most of these highs coming in quarter four. So with that in mind, and the time frame from the breakout low, so you can see the breakout from the all-time high, major pullback into a low, and then how long does it take to get to that next all-time high? Prior cycle, 5 months, roughly speaking, of course. We had the breakout 2017, big pullback, well, the most significant pullback in that whole move out into price discovery. That was, you guessed it, 5 months as well. So there it is, July into the top there of December. And then the prior cycle, you had also the higher low here with 4 months, almost into the 5th month. But I'm also looking at this particular low because that was the largest swing when the market broke out of that previous top. So roughly 7 months. And that entire bull market was 37 months. So slightly longer than the last two that we saw. 35 months from the low to the top. That's 2017. And of course, 2021 was December into that top as well. So at 35 months, that takes us to October. 36 months takes us to November. 37 months takes us to December. We can all do basic time counts on a long-term time frame. So with that in mind, we zoom down to the shorter time frame here, just looking at the daily chart with dates in mind. So today's date is the 11th of September, obviously a very highly emotional day, especially for the US. And we're looking 2 months from today. So coming into the mid of September, 2 months from today, September, 2 months out, that takes you to roughly mid-November. Now, of course, it seems way too easy to say last cycle was November. That means the all-time high is going to come in here in November, which is why we've been talking about and looking for some sort of local top, not trying to call the tops. As you'll recall from yesterday's video where we looked at the gold and silver multi-year bull market, discussing some of the legends and what they've said about trading and investing, we're not trying to pick all the tops, not trying to pick the lows. We're just following the charts and making our decisions based on our trading plans. So getting into this top, we're looking 2 months out from this point. The dates are very, very interesting here. November, very emotional move to the upside. November, that was 2024. Of course, it was around the US election. 2022, November, crash. FTX splashed all over the news. Year prior to that, November, all-time high. October also had an all-time high. November was the final all-time high. 6 months earlier, May, big lower swing top. Big lower swing high here. Bam, market got collapses. December, really important date here, moving to high. And December, November, December, November. We'll come back to those in just a sec. But I want to get to the point of why I'm looking at these dates. And we've seen a couple of news things come out that are pushing timeframes out, ETFs being released in October. This one, however, 18 hours ago, CBOE plans 10-year dated Bitcoin and Ethereum futures for the US. What's the importance of this? Well, 2017, and here is your article. This is from December 18th, 2017. They launched the Bitcoin futures becoming effective on December 17th, which was a Sunday, being traded on December 18th. Launches the CME Group's futures and comes just a week after CBOE launched their Bitcoin futures market the week earlier. So what happened to Bitcoin in December of 2017? I think most of us should recall that. We got the all-time high, and the week before that, you had another very significant top. This was a huge fluctuation, $4,800. People freak out about that sort of movement, price action now when Bitcoin's above $100,000. Can you imagine what it was like when $4,800 was 28% of the Bitcoin price? So the point being is that we're looking at highly emotional times in the market, and some of these significant news events that, for whatever reason, happen to come out around those times. And I've talked about the October dates coming up, whereby the SEC has pushed out more announcements around ETFs, more ETFs for Bitcoin, Ethereum, and XRP. And so 2017, we saw two major things happen there. CBOE, futures announcement, managed to rise just up into this final peak here. And that was the CME futures for Bitcoin, which then the markets collapsed from that point. Here are other highly emotional periods like that bar before anything else, for crypto. That was the biggest bar in its history, going from 11,000 down to 8,500. So it's still a significant bar in today's standards, moving $3,000, 2,780. You can imagine what it was like back then trading through these days here. And then prior to that, 2,400, 8th of November, 12th of November, halfway point, 10th of November. Look what happened years going on beyond that. 10th of November, all-time high. For whatever reason, very emotional times in the markets for, in particular, Bitcoin and cryptocurrencies. So I've also highlighted some of the December dates because they've popped up to be very significant turning points as well. Mid-December, breaking into new all-time highs after being underneath the all-time high for like 3.5 years. Very, very emotional times, December, and then of course those November dates. And of course, if you want to go into more detail with this, let me know in the comment section as well. But I think this is a very important time to be watching through to November and December. Could that be the all-time high? Of course, we'll have to wait and see. I don't have that crystal ball. And if anyone is promising you that crystal ball, I would personally run very, very far from those people, especially if they're talking about super cycles at that time as we come up into October, November, and potentially, new fresh prices for Bitcoin. They're promising super cycles, talking about super cycles. We haven't seen these certain things before, and these announcements and these situations with where the economy's at and gold prices going up. It's the same thing. They're just trying to say that this time is different, therefore keep holding your bags. Now, I'm still bullish on the markets going higher. We've just seen a new all-time high price for the S&P 500 and a new all-time high closing price for the S&P 500. It's still following very closely with our 5-year cycle. You can see here in the red line, this is the COVID collapse cycle. You can go back to COVID collapse and then how the market took off, consolidated through the period of late Q3 into early Q4, mid Q4 as well. There's November, and then it started to move again into that final all-time high. That's what the line would look like heading out into 2027. This is for the stock market, of course. I know I need to slow down when I say that as well because of the 18-year land and economic cycle. They are different things, but the markets move very closely together. Land and the economy typically peaks first. Stock markets keep running for a bit longer, sometimes 6 to 12 months. We've covered that before on the channel, which is another reason. If you are following along with your cycle analysis, make sure you subscribe to the channel. And if you're ready to level up your trading and investing, check out TIA Premium. There is a link to that in the video description where our focus is on the cycles and how we trade in and out of the trends themselves. Looking at the 18-year cycle, further to go here for the stock markets. And these were the targets that I posted about over 9 months ago. S&P 500 getting close to 6,700 points. Remember, this was January of this year and also December 2024 where I started talking about it. NDX 25,000 and of course the Dow Jones roughly 47,000. Market's still heading higher at this point, and the NASDAQ also still holding out here. It hasn't broken to a new all-time high yet, but it's still continuing to consolidate the gains. Of course, the AI narrative is still hanging out there in the background, it's still putting in higher prices. The Dow Jones also just hit a new all-time high price today, just by a few bucks there, but it still managed to hit a new all-time high while it consolidates above the previous tops. And of course, the Russell 2000 as well is still holding out relatively well as it attempts to get to a new all-time high price. Now that reminds me with Bitcoin and the price targets from here. Now I've talked about a price target of 122,000. That was on this particular post here that Bitcoin would hit at least 122 in 2025, possibly 144. I think we're still in the process of getting to those levels. The mid 130s, now that we have more price action, has given us more of these price areas, the extensions of the market, and that gives us a cluster around the mid 130s. Beyond the mid 130s, we're looking still towards the 160s. So overall, still quite bullish here. But I have to remind ourselves about the old narratives that come up towards these peaks, the old super cycle theories and whatnot that we hear around these tops. Now, the global liquidity index is, of course, a big one that a lot of people are following. No matter if you're following it on a 3-month lag, you can see here the offset bars of 92 days that I've got on the chart. I've had to remove the Japanese money supply. There's a bit of a bug in the data at the moment. You can see there. So forgive TradingView. Let's remove that and drop this down to, there's a 75-day that people are watching. You can see the change as it comes through, just drops it back a little bit, or some people are watching a 100 or a 110, whatever it is, it's roughly around the same thing there, just short of 3 months, just longer than 3 months, whatever it is you want to use. That's why I've got here, I'll bring it back to the 92 days. The point that I'm making with the global liquidity index and the smart ones that are using it, not everyone, but what I can see from some of them, they're not getting tied to this thing. It's just a bit of a guide. And that was one of my points I made when I discussed the global liquidity index months ago, is that this liquidity index can continue to rise a long time after a peak of Bitcoin comes in. Prior cycle, there is the all-time high price. The liquidity index peaked nearly 8 months later. So if you're still following this, hoping and praying that it's going to get to this top, well, you would have basically retraced the entire move down to below $20,000. So that's the first example there. The point with this is that as we get to the peaks, we'll probably hear more things around interest rates might be low at that time. Maybe they're rising again, but they might be lower again. Liquidity index might continue to rise like it has done at the moment. So that's 8 months. So you can go back to the prior cycle. Same thing again. Let's finish the point here. December to the top of the liquidity index, 7 months, 7 months until it got to the top, and you can see it rising through this whole time. Yes, it's offset by about 90 days, so you have to pull and push this thing, and that's not a way to trade or invest. You don't want to keep curve fitting the models that you are using. You keep curve fitting, you're going to end up with problems. So looking at these highs, you got the all-time high, major collapse here for Bitcoin, 50%, and it kept rising. Again, all-time high, collapsed for 8 months, liquidity index kept rising, and then it started to pull back. And now we see it just starting to break out here. Meanwhile, Bitcoin's been on a run since 2022, where we talked about this on the channel as well, looking around the lows, not trying to pick the lows, not trying to prepare for a recession or anything like that, just watching the charts and following the trend on the way up. So there's nothing wrong with following the global liquidity index. What can be quote unquote wrong is following it blindly and assuming that this is going to be the one and true reason why the market must keep going up. You keep seeing this thing rising, yet the price of Bitcoin is falling, breaking significant levels, showing our 3-bar signals from the highs, showing 3 bars on the daily, on the weekly, showing multiple reds in a row, showing swing breakdowns, yet this keeps rising. There is a lot of selling going on. There's probably a reason for it, and basically the profit takers are front running what they think is coming next, and in that case took 8 months, and the prior one also took 7 months. So yes, I'm still bullish long term. We haven't seen any breakdowns yet. On the other hand, it's just another reminder, let's not get carried away with some of these signals as they run into the tops. And as I said, the smart ones who are following this and they're not getting tied to it, they're probably going to do relatively well. The others who put every life decision on this, maybe not so. So now I've got my rant with the global liquidity index out of the way. We'll continue to come back to that as well and just see how things are progressing, whether it happens again, 7 to 8 months of continuing rising prices, and Bitcoin may be stalling out. But for now, as I said, still bullish. We still see the predictive cycles doing what it's doing best, consolidating through September. Talked about the short term at the beginning of the video. And through October, November, good times ahead, potentially into December as well. But of course, we need to keep watching whether there are other signals forming and we see some sort of rejections somewhere around that early or mid part of November. Nonetheless, our predictive cycles, composite cycles of 5 and 10 years are still looking relatively on track. If there is a correction here for Bitcoin, we come back and test the lows. I suspect it's going to be somewhere around these levels or maybe again around the highs, which would mean this blue line would drop somewhere around mid rectangle or potentially to the lower end of the rectangle. That's what we can see so far. And just another reminder that the reports have come out this week. You got one more report coming out today. Link in the top of the video description. Go to free report and then name, email address. You're not a robot, I hope, not one of the bots, and then hit subscribe. You'll get that report today. And if you missed out, you'll get them all come out next week. The interest rates look like they are still at 100% chance of a cut coming in less than 7 days. What does that mean for the market? Well, the Fed will have to start discussing what's going on with the PPI, and in the next 24 hours, the CPI. PPI did drop by 0.1 after last month's reading was huge, and that reading was at 0.9. So a big jump in producer price index. So potentially the inflation starting to flow through. You can see core CPI and CPI month over month is a slight increase here from 0.2 to 0.3. That's what the market's expecting. And CPI year over year, they're expecting it to increase from 2.7 to 2.9. If we didn't see as big of an increase, maybe it's sitting around the 2.7 or slightly under, then you'd probably see the interest rate probabilities really jump, stay here, or start to move even further this way to more cuts because there hasn't been as much inflation. If that inflation happens to rise, maybe we'll see this move back to this one. So no chance of a double cut here to 0.5%, but maybe it stays with 0.25% or maybe even a pause, because the Fed is basically watching these things here, your CPI and PPI. So you got the producers paying the inflation, potentially the tariffs. Then are they going to pass it on to the core inflation here, the CPIs? So that's what we're watching over the next 7 days. But long waits between cuts, say there is a cut, can still be quite bullish. S&P 500 returns after the Fed waits between 5 to 12 months to cut. Source Carson here. We're at 9 months. Next week is the announcement. So obviously there's question marks here, but with the cut, let's have a look on the side, the average increase over next year, you got next 6 months, next year, is 4% for 6 months, nearly 13%. So if we see a cut, generally there could still be a lot further upside. The median is 14% and 8% for the 6 months. Percentage higher, 91% chance because of these data points going back to the 70s. So over 55 years suggests that there is a good chance we'd still see further upside, even if there is an interest rate cut this late in the game, which is why I still talk about being bullish into the peak of the cycle, which, you know, that's obviously my suggestions here. You do you at the end of the day. If you were doing you, maybe you're into altcoins. I hope you like that segue. Hit the like button if you did. I did my best. USDT dominance, we'll get to hype in just a second, but watching the dominance and the major charts here, the dominance has fallen off. We've seen Bitcoin rise, and as I'm filming, we're at 114,000. Okay, so this is good news for everyone in Bitcoin and cryptos. We're seeing the dominance, USDT dominance, hit a wall, come back, we've got the double top, and it's falling at the moment. The goal here is a close below 4%, that's the low, and ideally at least a test of 4.1 before, if it does any sort of rise at this stage. Good things. So still positives there for the bull market. The others dominance chart, so everything excluding the top 10 continues to rally, as we've talked about over the last few days, getting to the next level, the midpoint here, around 8.3%, really testing these levels. So everything outside of the top 10, hype was one of those. which I'll segue into in just a sec. Total market caps also climbing here. This one's excluding Bitcoin and ETH, including everything else. So this includes our Sol and XRP and all that sort of stuff. New, fresh, daily high close. We have to go all the way back to the previous tops in December and January to beat that daily close. So some more positive signs that we're starting to see the market wanting to break out here, which I think also fuels my narrative or my thesis here that we could be getting towards the next, I don't want to say blow off move yet. We haven't seen a breakout of the tops. So I'm stopping short of saying blow off top. But if we start to see the breakout and then acceleration, these charts are suggesting we could get to that point once we see the breakout of the highs and consolidation above them at least. The others charts doing that in USDT dominance if we break those lows, as we've been covering for quite some time. So that is your total 3 and total 2, which includes Ethereum, just slightly lower here because ETH is also struggling to break past $4,500 after putting in a new all-time high price. We haven't seen the breakout yet. Should we see further breakdown, then the targets are still roughly around 4,000 for the first one, 3,800, 3,400, and then 31, 3,200. It's basically almost every couple of $100 to the downside because of the amount of history going back with ETH. Now, in terms of percentages, top to bottom, it's already done 15%. To the lows is 18%. To these highs, you're at 22, 23%. Also lines up with some of the previous highs in this cycle. Then back to the next low, 31, and to the 50%, 35. So I mention all of those because even with a significant correction like that, ETH is still remaining in a bullish structure. It hasn't broken or wouldn't have broken the major 50%. It's still holding up relatively well, and it's basically doing what it has done each of the previous cycles here. The invalidation to that would be closes underneath $3,100. That would be a little bit dire here for ETH. Hasn't happened yet and still holding up relatively well, even though ETH BTC has also begun to pull back here underneath the 10-year resistance line, as we've been talking about. It did break out a little quicker than I expected, but now we're basically back to where we were in August before that quick test. So Bitcoin has outpaced ETH in the last 24 hours, and over this entire period, Bitcoin is holding up better than Ethereum since ETH put in its top. I don't think there's any issue if it does fall back. It's got all the way to go to 3%, 3.3%, and it would still remain relatively strong for this next attempt to the upside. End of cycle targets, ETH versus BTC, so potentially somewhere we could look to continue to protect our bags and profits for the cycle, if you happen to be in profits, around that 5 to 5.5%. So I use it interchangeably. The 50% level is at 0.053. That's the important part there. On to HYPE, which has hit new all-time highs, and this was in our recent altcoin reports, testing the 50% level now on the extension at, call it $56 for a round number. Closes above, strong, and we would expect to see a longer move to the upside, targeting around $76. And should we get an extension, yes, the volume is lowering here on KuCoin, but if we get an extension of this move with the hype up into the tops that we've discussed at the beginning of the video, then we could start to target somewhere around the 80s and 90s, hopefully somewhere around the hundreds. And then we'll keep following up as we get closer to those prices. Sol is also climbing high here, breaking out of the 210. That's been the key level we've been watching for a very long time because that was the top back in March. You can see the market support breakdown, couldn't hold it. It was only very quick here and then got rejected again in February. Tested almost, tested on the money, tested underneath short term, and now we might be on the next move here for the breakout. If there is a close back under 195, fake out. Continues to hold here, then it looks like it's going to be a significant move, or at least a move that wants to test those previous tops at 260. which I'm looking for as being the next resistance level. And so now we watch for the interest rates announcements coming up next week, see if that allows the market to move a little more freely after that point. We're seeing where the trends are going at this stage. October and November, as we know for Bitcoin, are typically very good months. 73% chance of a green in October, matched by April and February with their positive results. And then you've got November and December where it starts to decline from that point. So watching out now for this next 2 months or so. Do we get the tops around October, November? Is it a local top and we continue to see the markets rally from that point? I think that's going to be the big one coming up over the next couple of months, 2 to 3 months actually. So hit the like, subscribe to the channel, make sure you've subscribed to the reports. And if you want to continue with your trading and investing, TIA Premium is the place to go. I'll see you guys back in the next video. Thanks again. Peace out.